Welcome to The Explainer. A massive conflict is blowing up in West Asia, and today, we're going to trace the shockwaves all the way back to India's economy. We'll get into how it's threatening everything from the price you pay for fuel to the stability of the entire stock market.
Wow, look at that. Oil prices just exploded, almost overnight. This one event is sending tremors through the global markets. And the big question on everyone's mind is, how is this going to hit a major, energy-hungry economy like India? All right, let's break it all down.
So to really understand the impact on India, we've got to go right to the epicenter of the crisis, a geopolitical showdown that's literally choking off one of the most critical energy routes on the planet.
And look, this isn't just any old shipping lane. You have to think of it as the main energy artery for the entire world. With the conflict heating up, that artery is now blocked. Trade has pretty much ground to a halt, and that has triggered an immediate and very severe global supply crisis.
So, this global supply shock, it immediately throws a harsh spotlight on one of India's biggest economic vulnerabilities. Let's dig into why the country is so incredibly sensitive to this particular crisis.
To put it as simply as possible, India runs on imported oil. A really staggering 90% of its crude comes from other countries. This huge dependency makes the whole economy just incredibly vulnerable whenever these global supply chains get messed up.
And listen, it's not just about fuel for our cars. This one hits home, literally. We're talking about the cooking gas, the LPG, used in millions and millions of kitchens. And unbelievably, 90% of that supply comes from this conflict region. It's now under direct threat.
Now, this is where it gets really interesting. This isn't just some vague theory. The Reserve Bank of India has actually done the math. As this table shows, there's a direct formula here. For every single $10 jump in the price of oil, inflation goes up and economic growth goes down. It's a pretty precise calculation for some real economic pain.
So, with the cost of energy imports just soaring, it was only a matter of time before the next shockwave slammed right into India's financial markets and, of course, the value of its currency.
The reaction on Dalal Street, India's main stock exchange, was, well, it was dramatic. First, we saw a 3-day rout that just wiped out investor wealth. Then, that was followed by a massive relief rally that added it all back and then some in just one day. That kind of wild swing tells you just how nervous the market is right now.
But the pressure wasn't just on stocks. The rupee itself came under heavy fire. The currency's value plunged, forcing the central bank to jump in and defend it. They're trying to stop a free fall and protect against what's called imported inflation, which is really just a fancy way of saying a weaker currency makes everything from oil to electronics more expensive for all of us.
Okay, so let's see how these huge, big-picture economic shocks start to ripple outwards and create very real problems for specific industries, on the ground.
This slide just illustrates the problem perfectly for airlines. They are caught in a double squeeze. It's a total perfect storm. Their single biggest expense, jet fuel, is just skyrocketing. And at the exact same time, their revenue is taking a huge hit from flight cancellations and really costly detours. It's a classic case of getting squeezed from both sides.
And the pain just spreads even further. City gas companies are facing supply cuts. The pharmaceutical industry could lose $500 million in exports. Fertilizer supplies are being threatened right before planting season, and it affects people directly, threatening the jobs of nearly 10 million Indians working in the Gulf and the crucial money they send back home to their families.
So, when you're facing a crisis on this many fronts, the big question is, what is India's defense plan? How is the economy actually protecting itself from all this?
The government's response has been swift, and it's been pretty comprehensive. As you can see, it's a 4-point plan. You've got a task force to manage supply chains. They're deploying strategic reserves of oil and gas. They're ordering refiners to find new suppliers. And like we saw, the central bank is stepping in to defend the currency. It really is a coordinated, full-spectrum economic defense.
And this number, this is India's ultimate insurance policy. A record $725 billion in foreign currency reserves. This is the financial shield, the firepower, that the central bank needs to defend the rupee and manage the fallout from a crisis just like this.
Okay, so after looking at the crisis, the vulnerabilities, and all the defenses, what's the bottom line? What does all this actually mean for you?
Here's the bottom line. The Indian economy is in a strong position. That robust growth acts as a powerful cushion. But, and it's a big but, it's balanced against a fundamental weakness, its dependency on imported energy. So the crisis poses a very real threat of higher prices, both at the petrol pump and in the shops.
Ultimately, this whole crisis forces us to ask a much bigger question. I mean, managing a short-term shock is one thing, but in a world that seems to be getting more and more volatile, how does India secure its long-term future? How does it move beyond these temporary fixes and build true, lasting energy independence?
If this breakdown helped you understand the complex ripples from this crisis, please do us a favor and help us out by liking, sharing, and subscribing.
And we really want to hear from you. What do you think is the biggest risk facing India's economy right now? Or what's the best long-term solution for its energy needs? Let us know in the comments. Thanks for watching.